If you're an owner looking to hire a general contractor or a general contractor looking to get involved in a HUD 221D4 loan, the following are some brief top-level considerations you should be aware of before getting too deep into the underwriting process. Fundamentally, a HUD 221D4 loan is going to require the inclusion of prevailing wages in costs. You don't have to hire a union contractor or union labor, but you have to make sure that the payroll, when construction is actually commenced, when it's ongoing, that you're meeting the minimum prevailing wages that are classified for a given area and a given project type. Most parts of the country, prevailing wage may not have an impact. There's an administrative burden with paperwork. It's the paperwork and payroll is done electronically, but typically to cost, there's not as much of an impact. But if you're in a major metro area, Boston, New York, LA, prevailing wages can be materially impactful, so it's well worth digging into that early on in the process. HUD's requisition draw process is done monthly, not too different from most draw processes, regardless of lending type. So the contractor, the architect, and the owner will go out monthly, inspect the work that was done, sign off on it, and typically the GC will receive the monies from that draw within 30 days. Retainage starts at 10% of each draw. It prorates down to 5% at 50% completion and 2.5% at 75% completion. That's assuming that construction's going well, there's no issues. If the contractor owns more than 5% of the mortgagor entity, the development entity like ABC LLC, the amount of retainage will not prorate downwards. Change orders are classified as necessary betterment, equivalent, or time extension. For the purposes of brevity, all you need to know is that change orders are allowed as necessary. It just requires kind of justification for why that change order has to be done. Contractors must be able to secure a payment and performance bond equivalent to 100% of the construction contract. The bond will not prorate during construction, so as construction is completing, the bond still has to remain in place 100% of the size of the construction contract. As an alternative option, HUD does allow you to post a cash deposit or letter of credit equivalent to 15% of costs or 25% for larger projects. But at time of recording, I've been doing this for over 15 years. I've never seen anybody not go with the bonding route because the premium, the bond premium, is an eligible cost for inclusion in the mortgage. It's just much less of a lift than having to put huge chunks of money aside during the construction period. Similarly, GCs are considered a principal in the transaction, regardless of whether they're going to be an owner or not on paper. By a principal in transaction, I mean we are going to be reviewing your financial statements, making sure that you are creditworthy. The form of the construction contract is the HUD 92442M. It's publicly available online. You have two options under the body of that contract. You can do a lump sum contract or a cost plus. If there's any relationship between the GC and the owner developer, you have to do a cost plus, and a cost plus will require you to do a cost certification, both the borrower and the GC, as construction is completing. If you do a lump sum, only the borrower has to do cost certification. So again, HUD 92442M is the master HUD construction contract. No alternatives will be used, and in that you can do a lump sum or cost plus. Cost plus has to be selected if there's a relationship between the owner and the GC. GC fees are mortgageable. General requirements or conditions are 4 to 7% of costs. General overhead is 2% of land improvements, structures, and general requirements or conditions, and builder's profits between 4 to 8%. Even if there's a relationship between the owner and the GC, you can still collect general requirements, conditions, overhead, and builder's profit. Regardless of a relationship between the owner or contractor, even if it's truly arm's length, the contractor will not collect overhead or builder's profit if more than 50% of the contract is subcontracted to one sub, material supplier, or lessor, or 75% of the contract subcontracted with 3 or less sub suppliers, lessors, and if 2 or more subs have common ownership, they're considered one subcontractor. For insurance, HUD does require general commercial liability, limits not less than $1 million per occurrence, $2 million in aggregate. For builder's risk, that can be paid either by owner or the GC. All the insurance premiums are eligible for inclusion in the mortgage. And builder's risk, if you're doing a project where you have, say, 10 buildings on site and you're doing the first 3 buildings are completed, then 4, 5, 6, the builder's risk can sort of prorate or come off the buildings that are completed and just be applicable to the buildings that are still actively under construction. Last big item to cover is working capital position. Basically, HUD's going to look at your projects that you have outstanding, the size of the proposed construction project that's going to be funded with the 221D4 loan, and wants to make sure that the GC has a working capital position equivalent to at least 5% or more of the construction contract. This is not designed to be punitive. It's not designed to be painful. It goes back to that GC is a quote-unquote principal in the transaction, making sure that they're credit-worthy. We just want to take a look at your balance sheet, look at your projects that you have in progress. Everything's confidential, and make sure that you are adequately capitalized. if there is some sort of shortfall for whatever reason, you can kind of help meet or offset the working capital position with lines of credit or other assets that you have. So I hope that was helpful. Just trying to provide a very brief summation of key kind of high-level items to consider. So fees that can be charged, bonding, insurance, prevailing wage requirements, working capital positions. I'm happy to send this document to you. I'm happy to discuss in more detail. So appreciate you watching. Thanks again.